Hey, hey, hey. Hello, everyone. Kim Antonucci with Movement Mortgage. We are here doing our podcast, Kimmy Talks. Today is Monday, so we are talking about mortgages. I know it's so much fun. But hang with me. I'll try and make it fun. So I just want to recap last week a little bit. Sunday, we did not go live because we showed up to an open house that was literally canceled that morning. Um, so just an FYI, this market is so hot that apparently if an offer comes in before the open house, they're just going to shut down that thing. So we didn't get to show you the super cool house on Sunday. Sorry about it. But Brandy and I got to hang out and have some pizza, so whatever. I'm good with that. And then I hung out with my mom this weekend. In case anyone was wondering, it was super awesome. And we made Easter bread, which was so yummy. I don't think we put enough anise in the bread. Like, we got a little scared. So the recipe called for half a cup, and I was like, I don't know about that. So we didn't put a ton in, and we kind of had to make up for it on the glaze on top. But anyways, long story short, it tasted delicious. And then Wednesday, talk about this coming Wednesday. We are hoping to have another guest, but we don't know yet because nobody has offered. So if you're a real estate agent or anybody in the real estate market, you don't even have to be a real estate agent, but anybody who likes to talk about real estate, please let me know if you'd like to join our podcast on Wednesday. All right, so we are going to talk mortgages. Okay, so today I want to talk a little bit about renovation loans. I feel like it's just so important in this market for people to understand that this is an option. And also, because I'm going to share a little personal experience as well. Um, but basically, we're going to talk about renovation loans. So, the different types of mortgages, um, the pros and cons of home buying with renovation loans, credit score requirements, and then anything else. So I see that we have some listeners and some watchers. Hey, everyone. If you have any questions during this live broadcast, you can comment below. And Brandy and I are here to answer your questions. She's on the other side of this computer, so she will let me know if anyone is asking questions about this cool stuff. So, all right. So, what is a renovation loan? It might seem simple, right? It's just a loan for renovations. But it's not that simple. It's actually quite complex. So there's two types of renovation loans. You can do a FHA 203K renovation loan, or there's a conventional version that's called a home style renovation loan. Um, Both of them can be utilized for a primary residence, but cool feature on the home style is it also works for investors. It is just for single family residents, but if we have an investor who wants to renovate a property, then we could set them up with this home style, the conventional home style, which is a pretty cool program. And then within the FHA 203K, there's two different types of 203K loans. There is a limited and then a standard. So the limited 203K is anything 30,000 and below in renovations. So the standard is anything 30,000 and above, and of course, then you need a HUD consultant as well. But they're both really excellent programs, and they're going to help us out in this market. I'm doing a lot of renovation loans right now for my clients, and this market is tough. People feel like they need to settle for things that they don't really want. So these renovation loans give them the opportunity to maybe settle, but then turn this home that they just had to settle on into something that's actually their dream, right? And it's really great. So with the FHA 203K and the home style, they're going to help you finance all of the costs of the renovations into the loan, into the mortgage. FHA 203K is your standard 3.5% down payment. And also, you still get the 6% seller concession if you need it. And everybody's sitting there saying Kim's talking words that nobody understands. Like when she says 6% seller concession, everybody's like, wait, what? So, a little bit about that. A seller concession is basically the option to roll the up to 6% of the closing costs into the loan. So, how do we do that? How do we do that? It's confusing. Is the seller paying it? Am I? What's going on? I don't understand. So, here's how it works. Say the house is 100,000. 6% of that is 6,000. So we take and we want the seller to net 100,000, right? So we're going to take that 6,000 and put it on top of the 100,000 that we want our seller to net. So now that's giving us a purchase price of 106,000. But $6,000 is coming back to the buyer at closing. And so the seller walks away with their 100,000 and 6,000 is going back to the buyer to help towards closing costs. Not technically back to the buyer. But it's credited in the transaction, right? So that's what a concession is. So FHA 203K loan, 3.5% down with up to a 6% seller concession. Conventional is your conventional products. 5% down, whatever percentage down that you want to do other than that. 5% is going to be your minimum, and then a 3% seller concession. And the concessions change. They can increase with your increased down payment. Of course, always consult your loan officer who's doing the renovation loan for you. Here's something I really want to touch on. If you are in the market and you need a renovation loan, here is my suggestion to you. Find a contractor now. Find a contractor before you even look at houses that you would want to renovate, and get ready to write that offer. And the reason why I'm saying that is I am experiencing it myself, people. I'm trying to do a flip, and it is like almost impossible to find a contractor who is available and who can do these things. So my first recommendation is to find a contractor. My second recommendation is to go look at the house with this contractor and get a rough estimate before writing the offer. Why do I say this? Because it is so important that you and I, or you and your loan officer, talk about all of these numbers before you write the offer. You want to know, how are you going to know what to offer the seller if you have no knowledge about how much the renovations are going to cost and what we think that value is going to be after those renovations are completed? These are all things that you want to discuss with your real estate agent and your loan officer and even your contractor before writing an offer. And I know in this market it's tough because we got to just be writing offers. And that's why I say let's try and get prepared way up front. Let's have a contractor before we even look at these houses. So that's a little bit about these renovation loans. And of course, we can go into more detail sometime if people are interested in learning about the actual qualifications like property and appraisal qualifications and all of that stuff. So here's just some general mortgage questions that we get throughout the week, right? So how do I qualify for a loan? Well, the first thing I say is the very first step is to complete my secure online application. The best way to know if you qualify for a loan is to complete the online application so that the loan officer can review all of your income and assets and figure out what you qualify for. Then we can have a nice conversation with you and go over all the different loan programs that you would qualify for. But that is the very first step is completing that application. And before you complete that application, do a little self-evaluation. Think, do I have a 2-year employment history? Because you got to have it. How much money do I have for a down payment? It helps us for you to know how much money you have. What is my credit score? Credit score is a big factor, right? So, one of the questions we get is, can I get a mortgage without a credit score? The short answer is yes. Yes, you can. The long answer is there's a lot more paperwork. So, if you don't have a credit score, we can make it happen for you. I usually help advise my clients on how to obtain a credit score before finding a home, just to make the process so much easier for everyone. And maybe we'll do a whole podcast on tips and tricks of getting a credit score, because I've got some. But without a credit score, you need non-traditional credit. Again, I'm probably talking in a foreign language to some, but non-traditional credit is credit trade lines that are not reporting on our credit reports. So utility bills, cell phone bills, childcare, all of these things are non-traditional trade lines, non-traditional credit that we can use to qualify you for a mortgage. Just keep in mind that without an interest rate or without a credit score, the interest rate can be a bit higher as well. So your down payment might be a bigger one and your interest rate might be a little higher. These are all things that you want to talk to your loan officer about and kind of see where you go from there. So the difference between being pre-qualified and pre-approved, that's another question we get, and it's a great one. Pre-qualified is basically somebody just took a look at your credit and said, yeah, you're good. They probably got an application on you and used whatever stated income you put on that application, whatever stated assets you put on there. And then they pulled your credit and they said, yeah, this would work. So they pre-qualified you. A pre-approval is when an application has income and assets that have been verified. What that means is we've obtained the documentation to support the stated income and assets on the application. And it's also been run through an automated underwriting system. So it's been run through Fannie Mae or Freddie Mac or GUS for USDA. So that's the difference between a pre-qualification and a pre-approval. In this market, in this day and age, don't fly with a pre-qual, guys. It's not cool. Uh, get a pre-approval. I don't even issue pre-quals. Just pre-approvals. That's the way to go. So how much can I afford? It's so funny. I can't even tell you. I have so many people who will like shoot me an email or a text message and they're like, "Hey, like I make this much money. Um and so how much house can I get?" And I'm always like, it is very hard to tell you how much you can afford without an application. And, people are like, "Oh, I don't want you to pull my credit. I just want to know, like, how much can I afford?" Here's the thing, people. If you're going to buy a house, you're going to get your credit score pulled. How about this? If you're going to buy a house with a mortgage, if you're going to buy a house cash, awesome. Don't worry about it. Go talk to your accountant on how much you can afford. But if you're going to buy a house with a mortgage, you're going to need your credit pulled. And you don't want a loan officer to just guess based off of information that you emailed or text them. It's not a good plan. It's just not. And it's so hard when our clients come to us and put us in that position, right? Because we want to make you happy and we want to make sure that we're always advising and educating. But unfortunately, in this scenario, the way that you're going to find out how much you can afford is to complete an online application with your loan officer and have everything reviewed. It's the best way to go. So how much should I save for a down payment? That's another great question. You know, again, talk with your loan officer. Figure out what's doable because there are so many loan products out there and so many options. There's 0 down payment all the way to 20% down, right? So, I just had another client recently who I was talking about their pre-approval and what they qualify for, and the gentleman was floored that I said I could do 5% down on a conventional loan. He's like, "No way. I always thought they always say you got to have 20% down." I said, "Absolutely not, sir." Um so talk to your loan officer. See what you can do. Usually we can find a product that's going to work for you. I'm not saying talk to a loan officer with $0 in your bank account because that's probably not going to work. You need some money. You need some money to buy a house. So how do you know which mortgage options are right for you? Again, be sure to complete an application and then set up a consultation with your loan officer. You want to be able to go through all the different loan options that you have available to you. And the only way to do that is for a loan officer to be able to look at all of your income and assets and your credit and advise you in a very, very, very informed way on what products are going to be available to you. Do I need to be working full time for a certain amount of time? That is also a great question. It's going to depend on the product. If we go FHA, if we go conventional, and it's going to depend on what we call full time, right? Full time for our underwriters usually is a consistent 40 hours a week, but we know some other companies full time is 37 hours a week. We will take that into consideration, but again, everything needs to be documented. So, FHA, I will tell you that requires a 2-year history period. Conventional, we have a little leeway there. And with in some cases we can do 1 year. So, just talk to your loan officer. If you say, you were part-time and now you're offered a full-time job. Um, Usually going conventional, we can look at an offer letter and we may be able to use that income for you. Uh, so, um, I think that is it. I think that's all we have. There is a link in the bio of an article on rates and home prices right now. So be sure to check that out. I posted that on, I believe it was LinkedIn a few days ago, and it was getting a lot of uh, viewers. So it seems to be a pretty cool article. Check it out. And then tune in Wednesday. Not sure if we're going to have a real estate agent or not, or what's going on yet, but it's going to be talking real estate and it's going to be a surprise. And then, of course, Friday, we will be talking about things coming up for the weekend. And there probably won't be any open houses since Easter Sunday is Sunday. But if Brandy and I happen to find an open house available on Saturday, maybe we'll check that out for you guys. So, anyways, speaking of Easter, comment below. Let me know, what are your Easter plans this weekend? I am having Easter at my house, and I have both sides of the family coming over. So I am very excited about that. And so are my boys. They love to see their cousins. So comment and share with me what your plans are. And until then, oh, and don't forget, of course, you can always see the live podcast on Facebook, LinkedIn, and YouTube. And then the audio you can get from Spotify, Apple Podcasts, and Spreaker. All right, so check me out. Don't forget to follow me on TikTok, people. I am still needing 1,000 followers on TikTok so I can go live on there. It's at Kimmy Antonucci. So check me out. Follow me on TikTok, please. All right, everyone. I can't wait to see you on Wednesday. Until then, stay happy and stay healthy. Bye-bye, everyone. Mwah.